let's talk
Yeah.
about Rocket Lab. I was quite, it's not a big company, right? I mean, it's not a very big company, and you put about 10% of your money there. I don't know, you may have put 6%, it may have grown to 10%. That's a different thing. Or now you're saying 20% or something. When I looked at it, it was not 20%. So what does it the company do? I mean, that's the first thing.
Yeah. Okay. Well, I mean, let me tell you about like how I navigated it, and then we'll
Yeah.
talk about the company. I'm happy to go deep on this one. So, this is like really close to my heart, by the way, because I buy an investment gift for many of my friends' children and also other children in the family. And I bought Rocket Lab for them in December 2023 and again in December 2024. That
Mm,
was the level of my conviction. I was willing to put my reputation as Uncle Luke on the line with this one.
mm,
Um, so in my own portfolio, I've bought this 5 times, and
mm.
I've only really actually, in terms of my own money, I've bought probably a 2.5% allocation, and today it's about a 14% allocation. So the stock has been on an incredible run, and let's kind of unpack why and kind of what we think about it today. So first of all, very high level, who are Rocket Lab? So it's an end-to-end space company. They provide launch services, they make satellites, and then they put the satellites in orbit, and then they operate them. And so it's kind of the whole shebang.
Mm.
If you want to have some kind of communication or monitoring satellite, Rocket Lab can do it all for you. It's got customers in the defense sector, in government, and also commercial markets. So again, it's kind of touching all
Mm.
segments.
Mm.
It's actually the leader in small satellite launch.
Mm.
So we'll all be familiar with SpaceX and SpaceX's Falcon 9. That's considered medium launch. Um, in small launch, Rocket Lab are very cost competitive.
Okay.
And the benefit, say you're a smaller customer and you want to put something into orbit with a Falcon 9 with SpaceX, well, you either have to spend a lot of money and buy the entire payload if you want to go to a specific orbit, like a specific location. Maybe you want to put like a satellite that monitors
Mm.
like a certain part of the world, so it'll go kind of pass over that every many hours. So if you go to SpaceX, you have to spend a lot of money because it's a lot of capacity. If you go to Rocket Lab, you're buying much smaller capacity, up to about 300 kilograms, and
Mm.
then you could buy that whole capacity and you can put your payload into a very specific orbit for
Mm.
your needs. So it's much more cost effective for smaller customers.
Okay.
Right. They've had an incredible track record. So they've now completed 64 successful launches and only 4 failures. So out of 68 attempts, 64 were successful. Like the first one failed, but since then, only 3 other failures. And that's almost unheard of in the space industry.
Mm.
Um, like space is difficult, it's expensive. I think there was a launch failure in Australia just a few days ago that kind of draws a line under this. It's
Mm.
very hard, but Rocket Lab seem to be making it easy. And if
Mm.
we talked about revenue growth, like
Mm.
if we just look at the trajectory of their business
Mhm.
in 2024, they had 16 launches, and now year to date they've had 10 launches. So they're on track for 20 plus launches this year. So that's like nice growth. And even if you look at say 2024 full year, that was 60% year over year growth in terms of number of launches from 2023. So nice steady growth in like demand and supply. There's plenty of demand out there.
Okay.
We'll come on to why the stock valuation is where it is, but to sort of touch on the main reason for that, it's something called Neutron. So they are trying to get into the medium lift category to be more competitive with Falcon 9 because it opens up the market for them, lets them move up the value chain, compete with like the larger aerospace players like SpaceX. So they've got their program of Neutron coming with a test flight planned for second half of this year. Like market's somewhat skeptical whether they'll hit that date, but certainly first attempt with their medium lift rocket is going to be a very volatile time for shareholders. So like something to watch out for. They've able to pivot their technology not just into putting stuff into orbit. They've also got something called a HASTE program. So essentially, they're using their Electron rocket, but to put payloads into like a hypersonic um, speeds within below orbit. So it's like really reading between the lines. That's like hypersonic missiles and defense systems like that, which there's, the situation in the Middle East and the situation in Russia, Ukraine, like governments are looking for alternative technologies to like essentially sort of expand their strike capability very, very quickly. And hypersonic missiles are one of the answers to that. So Rocket Lab's HASTE program, there's plenty of demand for that. Whether you believe in and support kind of military action or not, the customer has demand for those kind of services. And there's a whole bunch of other exciting things they're doing. Maybe one just to touch on before we look at the numbers is their Venus Life Finder program. So they're planning next year, next summer, to be the first private company to try and put a payload into orbit around Venus and then start the sampling like Venus's atmosphere. That's quite exciting. Like governments have done that before, but the first private company to do that. So that's kind of an exciting science moment. So we mentioned when we were talking about fiscal AI, there's the launch segment and also space systems segment. So launch is very exciting. That's like seeing rockets go up and hopefully not crashing. Space systems is really where the money is. If you're an investor, that's the bit that keeps you excited. That's where they manufacture satellites. They have their own bespoke payload called Photon. So kind of like a cookie cutter style satellite that other customers can attach their own like sensors and instrumentation to, or they can build a satellite with the components that they manufacture. They're very vertically integrated for customers to really achieve any kind of objective. And so space systems today, I think over the last 12 months generated $338 million, whereas launch was just $128 million. So it's kind of $500 million in revenue, but almost 2/3 of that is space systems. So that's really where the money is as a Rocket Lab investor. So I really like this company, and hopefully you can see my enthusiasm for it. But right now, I do not like this stock. Right?
It's very expensive, isn't it?
Yeah. But the opportunity is massive. The space economy is reckoned to be a $500 billion industry last year, and it's expected to reach $1 trillion over the next 10 years. Maybe some banks have even said like $3 trillion. So the market opportunity is enormous because Rocket Lab have only got like $500 million market share. So plenty of room to growth. And they are growing well. Like if we look at some of the positive financials, I always said, like focus on the fundamentals of the company, not the stock. Like revenue is growing really well. Seven times revenue growth over the last 3 years. Gross profit is growing really well. Now it's $116 million a year, up 126% year over year. So the company's got a good model. They're still making an operating loss because they're like a young space company and they're investing in their Neutron program. But the operating loss is, there's good reasons for why they're generating that operating loss as they scale out. And also really well funded. They've got cash reserves of about $270 million, a current ratio of 2.1. So that's like they have twice as much, essentially, like money they can get their hands on to cover their debt. And they've got quite a big backlog, over $1 billion of booked work that they have to fulfill over the next few years. So they're like, if you look at just those numbers, they're really robust. They're well set up. They're operating in a prudent manner. They're getting ready for Neutron. But if you look at the valuation, this is where the wheels come off a little bit. Like I'm happy because the valuation has gone crazy. I look like incredible Uncle Luke who's delivered, a multi-bagger return for my friends' kids and in my own portfolio, frankly, as well. But if you look at the valuation, it doesn't make sense. And it's because investors, like it's almost become a meme stock on forums like Wall Street Bets, right? Everyone's excited about Rocket Lab and they're really excited about Neutron, which is this medium lift, which is hopefully going to happen this year, first test flight. But the valuation now is, if we look at it on, say, a price to gross profit basis, it used to trade in a range of sort of 30 times gross profit. It's now 165 times gross profit. So the market has really bid it up beyond all kind of reasonable points. When I was buying this company, it was a $2 or $3 billion company. Now it's a $21 billion company.
Wow.
So that's it's got a little bit out of hand. And it's because everyone's so focused and excited about Neutron, they've lost sight of the fact that actually what this company is about is space systems and manufacturing satellites. And so the fever and the excitement has taken hold around this company. So I think the very best possible outcome is they're successful with Neutron later this year. And if they are, probably that success is already baked into the valuation. If they fail with Neutron, which frankly is likely, like space is hard, the valuation is going to get decimated. And if they fail with like the second and the third Neutron attempt, they're capitalized for that. They've got enough money to make many attempts. But if they have a succession of failures, which is not out of the question, the stock is going to get crushed. So I would say if you don't own any Rocket Lab, I would buy some today if I was not an owner. A small allocation just to get a foot in the door, motivate myself to start doing the research and understand the company. Do your own due diligence. Don't listen to guys like me. Figure it out for yourself. But if you have a relatively substantial allocation, you probably now, if you're prudent, you want to start thinking about trimming that and managing your exposure.